Hello, student. My name is Mrs. Morel Joseph Yayok. I'm happy to meet you once again. In our previous lesson, we started the preparation of a final account. And we say a final account consists of the trading account, the profit and loss account, and a balance sheet. In the previous lesson, we prepared the trading, profit, and loss account, and today we shall be looking at the preparation of a balance sheet. What is a balance sheet? A balance sheet is not an account, but a financial statement that shows the summary of all the assets and liability of a firm in a well-organized form, which showed clearly the financial position of a firm. Assets. What are assets? Assets are the properties of the business or firm. The assets are classified into two, namely fixed assets and current assets. What are fixed assets? Fixed assets are those assets that can last for a long period of time in the business, that is, from 5 years and above. They are of permanent nature and they generate revenue to the business. Example of fixed assets. We have building, land, motor vehicles, office equipment, etc. While current assets are those assets that can last within the financial year, which is just 12 months, that is 1 year. Example of current assets are stock of goods, cash in hand, cash at bank, and debtors. Who are debtors? Debtors are the customers that bought goods on credit from the firm. Now, we talk of liabilities. Liabilities are the money the business is owing the outsiders. Example, a loan from bank, individuals, or when a supplier supplies goods on credit. Liability can also be referred to as claim on the company's assets. Liabilities can be classified into long-term liabilities and short-term or current liabilities. Long-term liabilities are the debts to be paid within 5 years, e.g., debentures or loan from bank and individuals that will last for 5 years. While short-term or current liabilities are debts to be paid within the financial year. Example of current liabilities are creditors and accruers. Who are creditors? Creditors are our suppliers that supplies us goods on credit. For that, the organization is owing the supplier. Then accruers. What do you mean by accruers? When we talk of accruers, we have workers in the organization where workers have not collected their salary for the past 2 months. That money that the business is owing the workers is known as accruers. On the credit side of the balance sheet, which is the right-hand side of the balance sheet, assets are being arranged based on their lifespan, that is how long they will stay in the business. While on the right-hand side, which is the debit side, we have the capital, drawings, net profit, and liabilities recorded on the debit side of the balance sheet. What do you mean by drawings? Drawings are the money, or drawings is the money the proprietor or the owner of the business take from the capital for a personal use. And this we normally deduct from the capital. Then the net profit is also added to the capital in order to be able to expand your business. After you have prepared your trading profit and loss account, the net profit is being added to the capital. Now, example, we have an example of a preparation of trading profit and loss account. Example, we have Emeka has the following balances in his books as at 31st December 2009. Prepare his balance sheet. Now, the information are as follows. We have capital, 45,000 naira. Motor vehicle, 57,500 naira. Office equipment, 14,250 naira. Net profit, 5,000. Bank loan, 27,500. Stock, 5,000. Debtors, 7,500. Creditors, 7,500. Cash in hand, 750 naira. Now, to prepare the balance sheet is in a T form, normally in a capital letter T. So we have the right hand side and the left hand side. The left hand side is known as the debit side in accounting, while the right hand side is known as the credit side in accounting. Now, we said all assets are always on the right hand side, and these assets are to be arranged based on their lifespan. That is, the asset that will last longer will be the first asset to appear in the balance sheet. Now, we start with the fixed asset. The first thing you need to do is you write the name of the organization. Now, you write the title, and the title is Balance Sheet as at 31st December 2009. Now, after you have drawn your table, in each side, we have 2 naira columns. We are going to start with the right-hand side, where we are going to record all the assets. Now, student, we have 2 fixed assets. That is office equipment and motor vehicle. Which of these assets will appear first, since these assets are to be arranged based on their lifespan? Now, the first asset that will appear in the balance sheet is office equipment. Why is it that office equipment will appear before motor vehicle? An office equipment can last for more than 5 years without depreciating. But a vehicle can depreciate or damage within the financial year. For example, if I should buy a car today, tomorrow I might get an accident and that vehicle becomes condemned. So in this case, office equipment will appear before motor vehicle. Now, we have 2 naira column. We have to go to our balance and see if there is provision for depreciation. If there is no provision for depreciation, so the figure of the fixed asset will be recorded under the second column of the naira side. So in this question, there is no provision for depreciation. For that, we are going to start with office equipment. The figure is 14,250 naira. This figure will be recorded under the second column of the naira sign. The next is the motor vehicle, and the figure is 57,500 naira. It will also be recorded under the second column of the naira sign because there is no provision for depreciation on vehicle. Now, after recording your fixed asset, you now sum up your fixed asset in order to get the total figure of the fixed asset. Now, when we add 14,250 naira and 57,500 naira, we are going to arrive at 71,750 naira. That gives us the sum total for the fixed asset. Now, the next stage is to record the current assets. The current assets are also recorded based on their lifespan. And the current assets we have are stock, debtors, and cash. Which of these will appear first? The current asset that will appear first is the stock. Why is it that stock will appear before debtors? Your stock can stay for good 1 year without you exposing them out. That is, you can keep this asset for the whole year without making a sales. But your debtors, they have made a promise. They bought goods and they gave you time. And that time, when it comes, they will settle their debt. So stock would last longer than debtors. So for that, stock will come first. And all the current assets will be recorded under the first column of the naira sign. Why are we recording the current assets under the first column? Because we want to get the total figure for the current assets. Now, stock, we have stock 5,000 naira. We have debtors 7,500. Cash in hand 750 naira. Now, when you sum up 5,000, 7,500, and 750 naira, you arrive at 13,250 naira. And this figure will be recorded under the second column. Now we are going to take the total of the current assets and the fixed asset. The total of the fixed asset is 71,750, while that of the current asset is 13,250. Now when you sum them up together, we are going to arrive at 85,000 naira. We are done with the right hand side. Now we are going to the left-hand side. Now, we also have 2 naira columns on the left-hand side of the balance sheet. The first thing that will appear there is your capital. And what is capital? Capital is the money you use in starting a business. And this capital, after you have made a profit, you now add that profit to the capital figure in order for you to expand your business. Now, the capital we have here is 45,000, and this will be recorded under the second column of the naira sign. You now add your profits, which is 5,000 naira. The information given to us, we don't have drawings. Normally, when you add your capital and your net profit, you will arrive at 50,000 naira. The next thing is to less your drawings. But in this question, there is no drawings. So the sum of the capital and that of the net profit gives us 50,000 naira. We have current liability. There is no long-term liability. The loan from bank in this question, the specific years is not stated. So for that, this loan will be treated under current liability. So the figure is 27,500 naira. And this will be recorded under the first column. Now, after your bank loan, we have creditors, which is 7,500 naira. There is no accruals. So we have only 2 current liabilities. When you sum off the bank figure, which is 27,500, and the creditors figure, 7,500, we arrive at 35,000 naira. Now we add the sum of the capital and net profit, which is 50,000, and the sum of the current asset, which is 35,000 naira. Now when you add 50,000 and 35,000 naira, you arrive at 85,000 naira. Now, in a balance sheet, the two sides must have equal figure. Where the balance sheet does not balance, that means there was an error. It's either when you were preparing your trading profit and loss account, you made an error, or when you were preparing the trial balance, there was an error. And once an error is being committed, your trial balance can never balance. Now, this marks the end of preparing the balance sheet. We can see that the two sides have equal figure, 85,000, 85,000. But in a situation whereby there is a disagreement between the two sides, you now find the difference between the two sides. Now the side that has a lesser figure, you now insert that difference in that side, on that side. And normally we have an account known as suspense account where these errors are being corrected, pending when you are going to detect this error. Now, in a balance sheet or in accounting, once you are preparing an account, the two equal sides must balance. In summary, we've learned that a balance sheet is not an account, but it is a financial statement that shows the financial position of an organization or a business. The balance sheet is in a shape of a capital letter T. The right-hand side and the left-hand side. The right-hand side, we call it the credit side in accounting, while the left-hand side, we call it the debit side in accounting. On the right-hand side, all assets are being recorded, while on the debit side, we have the capital, the net profit, liabilities, accruals, and so on. Now, I said in final accounts, we have the trading profit and loss account and the balance sheet. We prepare the trading profit and loss account in order to determine the net profits, and this net profit will be taken to the balance sheet. Before I leave, I have an assignment for you, a simple trial balance. You are to prepare a simple balance sheet. Draw up Mr. Abu's balance sheet from the following information as at 31st March 2010. We have capital, 97,000 naira. Debtors, 12,000 naira. Motor van, 38,000 naira. Creditors, 16,000 naira. Features, 18,000 naira. Stock, 42,000 naira. Cash at hand, 3,000 naira. I read my assignment again. Draw up Mr. Abu's balance sheet from the following information as at 31st March 2010. Capital, 97,000 naira. Debtors, 12,000 naira. Motor van, 38,000 naira. Creditors, 16,000 naira. Features 18,000 naira. Stock 42,000 naira. Cash at hand 3,000 naira. Thank you for listening. I still remain Mrs. Morel Joseph Yayok. You can contact me through this number 080-7386-8421. 080-7386-8421. Thank you. See you next.